Have you ever heard the phrase that $1 million is not what it used to be? In 1993, 30 years ago, $1 million then is now over $2 million today. In other words, it's lost half of its value. And inflation is doing worse than that. It's actually erasing our middle class. In today's video, we're going to explore what that actually means and what you can do against it, because either you're going to lose your wealth or this is the time to build wealth. Check it out.
One shot, now the future is yours. Go!
All right, check it out. Let's start with the definition of what inflation is, because how are you supposed to get any understanding of this conversation unless you understand this? Inflation is a rise in prices, which can be translated as the decline of purchasing power. Your dollar over time loses value. And over the last 100 years, on average, it loses at about 3% per year. Obviously, in the last few years, with some of the political decisions and printing trillions of dollars, what's happening right now is that's actually that's increasing the inflation and making inflation worse, which is why it's such a big deal. So the rate at which purchasing power drops can be reflected in the average price of goods and services. The rise in price means that a unit of currency effectively buys less than it did in prior periods. Here's some practical applications so you really see it in action. Inflation has reduced the value of the dollar over 95% with time. So $100,000, for example, in 2023, would have purchasing power of $1.8 million in 1980, 43 years ago. Look at the big difference of what's happened to money over time. Where $1 million in 1993 now takes $2,070,000 in 2023 to buy the same kind of goods. And here's just another example. When you take a look at 2002 to 2022, salaries have only gone up by 27%, but the cost of a home has gone up 148%. It's why Leave It to Beaver in the 50s and 60s, dad could have worked and paid for all the expenses of his family. By the 80s and 90s, we really needed a dual income earning family to just cover the same expenses. Today, 2 incomes is not enough, which is why I got millions of followers across all my social media. They're saying, Chris, can you teach me without spending more time how to actually make more money? That's also what today's video is about. How do you leverage inflation not against the money that you're saving and earning and putting away, but actually growing it? In my generation, everyone's like, oh man, the average person comes out of college making $50,000, $60,000 a year. I want to kind of crack that code and make 6 figures. So I want to make over $100,000. It's been this elusive number for a lot of people. But by the way, the number is getting less and less meaningful as we're still trying to hit that target, because you finally get to $100,000. You're like, whoa. This is not what it used to be. That's not a lot of money. Check this out. A new Lending Club report reveals that many Americans are struggling to make ends meet. 61% saying that they feel stretched too thin living check to check. 49% earning $100,000 or more saying that they're also living paycheck to paycheck. The past year has been a particular challenge as the double whammy of inflation and increasing interest rates took and continued to take its toll. Delinquency rate on credit cards is at an all-time high of 7.1%, above the 6% peak in 2008. Things are getting financially worse, and I got news for you. It's not going to get better, but you have a choice, right? So I'm a black belt in Taekwondo, and I'm going to tell you right now that you can either use someone else's energy against you or for your good. It's called chi. And in this video, I'm going to show you how to use inflation as a force for good, because there is a way to tap into it and use it to make money. So this begs the question, why is inflation even happening? The government continues to print money that they don't have, spend money that they don't have, raises or even suspends a debt ceiling that should hold them accountable, and subsidizes things like the pharmaceutical industries, military industries, and other giant corporate organizations. Congress couldn't come together and determine how to increase the debt ceiling and by how much. So you know what they decided to do instead? They said, you know what? We'll just push that off till the end of the president's term. For the next 18 months, we'll literally just have a blank check. Let's all agree to that. It's terrifying, but they all agreed to that, which means if we want to spend another $1, $2, $3, $5, $8 trillion, they can. But the more money they print, the worse inflation gets. I keep talking about inflation like it's a bad thing, just like the media is doing. But to me, I actually hope for inflation. Inflation is a great way to build wealth if you know what you're doing. I'll reveal that secret later in this video. So we know what inflation has done for the last 30 years. We know that basically it takes twice as much money to buy the exact same goods. What about 30 years from now? Will the same thing be expected to happen again? Well, U.S. debt levels are expected to rise from 98% of GDP in 2023 to 118% in 2033, but by 2053, 30 years from now, it's expected to go up another 195%. Basically, yes, it's true that 30 years from now, it will take twice as much money to buy the things that you're enjoying today. It's also expected that interest expenses on US debt is going to hit $1 trillion this year. So how sustainable is all this debt? Can we keep basically making more money? They call it financial easement. Can we just increase the money supply? No, eventually it's going to do us in. We can't keep this up, and you can expect it to keep happening, which means that you need to alter your financial strategy or for your future to say, okay, how do I work with inflation instead of inflation working against me? So check it out. The middle class is definitely being torn apart by all this inflation. And it begs the question, how do you actually leverage this to your good? Check this out. Save 20% of your income. 40% Americans have less than $1,000 in savings and drive a $60,000 a year car on a $50,000 a year salary, which basically means they don't know how to save money. You need to start saving $1 in every 5 that you earn. That's 20%. Then you develop multiple streams of income. If you earn more, then you can save more, and then you can invest more. So you can basically buy businesses, but more importantly, there's something else that you can buy that is a hard, tangible asset that when inflation goes up, so does this asset. Any guesses on what it is? It's real estate. Invest your money that you save in high yield returns. Now, 401ks, not IRAs, real estate actually increases with inflation. And so if you take a look at the chart on the left here, you've got what most people do. They're putting their money into savings accounts, certificate of deposits. Median yields is thinking 401ks, IRAs. But if you want to be wealthy, then do what the wealthy do. They put their money in real estate. They buy businesses. They buy franchises. They buy things that appreciate while spinning off a really great cash flow. So here's what you're looking for. You want to get your hands on some investment grade real estate. We're talking about a buy and hold strategy, single family entry-level homes. You find a home in one of the top markets that you can buy for $250,000 or $300,000. And in the next 10 to 20 years, if that ends up being worth $600,000 or $700,000, how many of those homes do you need to buy before you become a multimillionaire? The answer is not very many. Now, this is what I started doing nearly 20 years ago. And now I buy a home just about every single day. Now, what you also may not know is that $50,000 sitting in a 401k, an IRA, equity, savings in your home, when it's growing at just 5 or 6% a year, guess what that ends up meaning for your money? It triples over a 20-year period of time. But that same $50,000 sitting in investment-grade real estate producing 25%, well, that grows 27 times more than that tripling effect. And that's the game that I play in. And that's how I use inflation as my friend. When you know inflation is on the rise, you want to take your money out of the soft markets like stock market, 401k, IRA, and you want to put your money into hard, tangible assets, usually some kind of like gold, silver, metal, collectibles, or real estate, which also produces a positive cash flow, the appreciation, and monster-sized tax benefits. Now, there is a link below where you can actually learn about partnering with me, where I'll do 100% of the work for you, help you get your assets sitting in the game of real estate, and start tapping into some of the highest ROIs that are out there. Getting the information is free. Click the link below, learn about it, and who knows, you and I, we might become partners. You might have my cell phone where we get to chat, talk, connect, and build wealth together. Click the link below, learn more. Hey, thanks for watching today's video. I hope you enjoyed it. If you want to continue your journey with me, make sure you like and subscribe. But more importantly, Internet thinks that this video of mine is what you're going to need next on your journey of developing wealth. Click right here. I'll see you there. Let's go.